Welcome to Drill Down Earnings. We have a quick look at the latest earnings from Hewlett Packard Enterprise. This is the business story about one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. Increasingly, Hewlett Packard Enterprise is one of those dominant companies in the building out of AI machines, and this quarter proved it. Second fiscal year 2026, second quarter of their 2025 fiscal year, and a quarter's pretty good. Better than estimates in revenue, $7.6 billion in revenue is a little bit better than estimates. Earnings per share a little bit less than estimates. But when you dig into the business here, beyond the miss or the beat, and look at what actually happened, the actual numbers, it was a solid second quarter for this company. Revenue growth at 6% on a year-over-year basis, not the double digits we'd seen in some recent quarters, but also not the declines we'd seen in quarters before that. So when you look even further than this, you see some really interesting news here. So HPE signed and that's what we're calling it. Hewlett Packard Enterprise is a little bit much for the tongue. So HPE signed a $1.1 billion in net new AI orders. That's up from $900 million the prior quarter. And they converted over $1 billion of that into revenues. That is, they signed a lot to their backlog. We'll get to that in a second. But their AI system backlog now does stand at $3.2 billion. And their pipeline, they say, is multiples of that backlog. So their salespeople, after taking a hit, let's talk about this for a second here right now. So just 2 quarters ago, they announced a decline in their backlog and that they had de-risked one customer. They thought some customer wasn't going to come through. They took them out of the backlog numbers. They told us in a conference call that they'd replaced that customer with somebody else in the meantime, but the number they were reporting at the end of the quarter was the number at the end of the quarter, and they were sticking to it. That was really disconcerting. The fact that sequentially, while the next quarter was up on a year-over-year basis, it was down. Look, the AI backlog is growing again at 3%, and that's one of the most important things about this quarter. Now, when you look at their overall business, they've got their intelligent edge, that's their networking business, their Aruba business, they've got their financial services business, an important part of their earnings, if not their revenues. Hybrid cloud's doing great, but the server business is everything here. And so servers were up only 5% in the quarter. And that might have been a disappointment after some double-digit growth recently, but they say that while the servers were up to $4.1 billion, their operating margin down to 5.9%. They said that they improved that throughout the quarter with tighter discount controls, better inventory management, and new pricing analytics. I don't even know what that means, but charge more for your stuff. I guess that's what they're doing, and I guess it's working and fixed itself during the quarter. Their storage and their hybrid cloud business growing great, 13% on a year-over-year basis. Really doing great in terms of hybrid cloud, growing double digits here to $1.5 billion here. And their GreenLake business, their average recurring revenues in that business up to $2.2 billion, up 47% year over year. Great stuff. And as I mentioned, their hybrid cloud business up double digits, doing quite well. And finally, Intelligent Edge, that networking business with Aruba, $1.2 billion, up 7% on a year over basis. Their Wi-Fi 7 orders jumped triple digits sequentially. Really powerful for HPE. So the market loved these numbers. Stock was up 2%. I say love, 2% isn't a lot of love, but a little bit of love's a good thing, especially when the stock's down 2% for the year. The S&P 500 is up 13%. At least they've made up for those losses now in this print of these results. When asked in the conference call, Antonio Neri, the impressive CEO of this company, talked about how much they've learned in building these big AI systems and how it's really changing their business, and that every quarter and every month and every week and every day, they're getting better and better at building AI.
When you think about these large service providers or model builders, they tend to consume a large amount of compute. It's very compute driven, meaning accelerating computing. But that comes with networking and other things that you have to surround around the infrastructure, which obviously direct liquid cooling, which we have been talking about since last October, is now a necessity. And we believe HPE is uniquely positioned both from an IP perspective and manufacturing capability at scale perspective. It takes an enormous amount of work, and we have learned a lot in these deployments in the last few months.
So manufacturing AI machines at scale, that's what they're doing at HPE. Or what's it all mean? What's the one number that tells you a whole lot? The drill down earnings bite, well, we've got that for you in an essential summary of Hewlett Packard earnings. So Hewlett Packard Enterprise reporting Q2 fiscal year 2025 earnings. Your essential summary tells you there was a solid quarter with 6% growth and nice revenues in the quarter. on a year-over-year basis, even though not the double-digit gains we'd seen in the past. But the one number tells you a whole lot. The drill down earnings bite is $3.2 billion. That's how many unfulfilled written orders. That's the backlog for AI. It is growing again at Hewlett Packard Enterprises, up only 3% year over year, but up, which is a better direction than down, which is what they've reported in the past. So that increase, I think, leading to a lovely surprise in this stock. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.